welcome back. Let's talk about one particular company, and that's JSW Energy. It's a relatively new player in the Indian power space, but that doesn't necessarily reflect on its size. Set up in 2006, the power generator already has installed capacity of more than 4,500 megawatts spread across 3 thermal power plants and 2 hydel projects. The aim is to grow even bigger, taking total capacity to 10,000 megawatts over the next 2 years. That's a tall ask, especially at a time when power prices are not the most conducive and the sector's been plagued by stressed assets. So does it make sense to be as aggressive, or is the JSW Group company eyeing some of these stressed assets to achieve its own goal? Let's ask the company's joint MD and CEO, Mr. Prashant Jain, who's joining in right now. Prashant, thanks very much for taking out the time and speaking with us this morning. You know, the first question being what's been happening in the industry right now, and particularly with regards to the spot power rates, which have come off significantly, which are causing many brokerages to get concerned about the outlook of the earnings for the company. Can you just clarify that for us?
Yeah, good morning, and first of all, Happy New Year to all of you and your viewers. As far as the power industry is concerned, there is a significant growth which we are seeing in the last 9 months. What we have seen is a 6.2% power demand growth. And this is on the backdrop, you know, what we have seen that the power demand was not growing over a period of, 2017-18 or 2016-17. And that in the month of October, you saw the power demand grew by 11.5%, and in the December quarter the growth was 6.8%. So all in all, we are seeing the green shoots in the power demand, and the primary reason which I see in this sector is that in last 3 years the base demand has grown by 16%, and on a normative PLF adjusted basis the capacity addition is only 11%. So what exactly is happening is the demand and supply mismatch which was taking place over a period of last 3 years is contracting, and that is what is reflecting in higher merchant sales price also. So all in all, if I am about to forecast that in next 2-3 years time frame you are going to see a higher PLF for the entire power sector.
So actually, Prashant, my question was regarding the current decline in spot power rates to about 3.3 rupees kilowatt hour, which has come off from the month of October when it was about 5.9 rupees per kilowatt hour. So does that strain you a bit, considering you anyways have higher fuel costs?
See, spot power prices are dependent upon the demand and supply. So, as winter sets in, then the peak load power demand goes down. And because the peak load power demand goes down, the spot prices comes down, and that's what has reflected in the month of November and December. And again, in the month of January, the power prices have started going up. So that's part A. You need to see on a seasonally adjusted basis if you want to keep a track of merchant prices. I want to give you some number. 2016-17 for the whole year average merchant tariff was 2 rupees 42 paisa. 17-18 it was 3 rupees 26 paisa. Till date in the current financial year it is 4 rupees 8 paisa. So you are seeing a rising trend. Second thing which you have asked about the thermal prices. So thermal coal prices, in the month of November, December, we were seeing the API 4 index was $107. And in fact, at that point of time, our rupee went up to as low as 73, 74. Now, while rupee has appreciated and is settling around 70 rupees, 30 paisa, 40 paisa, the API 4 index prices have also come down from 107 to $94. So all in all, if I see that one side there is a demand and supply mismatch is contracting and the power prices will be going up, and I am seeing a downward trajectory in the thermal coal prices also.
There's a UBS report which talks about these prices that have come off the spot power prices, and that probably raises some concerns and brings about the focus on the untied capacity at the company. What is the
untied capacity at this current point, and does that change going forward?
So in last 18 months, we have increased our long-term PPA portfolio from 63% to 80.5%. So there is a significant long-term PPA addition. And right now, 19.5% is a untied capacity, which we will be tying up in over a period of 18 to 24 months time frame. And in fact, there is a thought process in our mind that should we tie up the complete capacity, or should we keep a certain mix of open capacity as well as the PPA tied up capacity, given the kind of a merchant environment you are seeing. And in fact, you know, in the context, if you look at, there is a coal shortage which is taking place in the power sector. And because of which the maximum advantage comes for the imported coal-based power plant in merchant prices. And if you see in the Q2 of the current financial year, the total coal imports went up by 44%. It went up by 19% in Q3. And that is what is reflected, that the maximum, you know, advantage which has been taken up by this shortage of the coal by the imported coal-based power plants. So the arbitrage appears to be going up in next 1 to 2 years, 3 years time frame. So that is what is also in our back of our mind, whether we should tie up the complete capacity or we should be keeping certain capacity open. But based on you know, the projections what I'm having, we can tie up the entire capacity in next 18 to 24 months time.
So just to follow up on that, last quarter you had you know, power purchase agreements for Vijayanagar as well as your Ratnagiri plants for group captive consumption. Any more of these agreements in the annual and the others as well, not just for Vijayanagar and Ratnagiri?
Our group company JSW Steel is growing very rapidly, and I have been given to understand by my counterparts in the steel business that they will be expanding and going to commission the Dolvi steel plant in next financial year. And with that, their power requirement will be going up, and we will be supplying more power to them. So the PPA portfolio will be increasing. So based on that projection, next financial year, our entire Ratnagiri portfolio will be fully tied up with JSW Steel. And JSW Steel is also planning to expand their capacity at Vijayanagar. So once the Vijayanagar capacity expansion also takes place, then our balance capacity will be tied up over there. So there is a clear visibility. That's what I explained to you, that we will be increasing our PPA portfolio maybe up to 100%, but we are evaluating should we keep certain capacity open.
Prashant, good morning. Neeraj here. Are you going slow on the inorganic side with reason, or are you waiting for better times and better values to come in?
Good morning, Neeraj. No, it's not like that. You see, in case of power sector, resolution of two assets have happened outside NCLT, which is Prayagraj and SKS Power. And none of the other assets could get the resolution because of the various complexity which are associated with the power plant. I believe that the better way to resolve the stressed assets is through the NCLT process. However, we are open either outside NCLT or within NCLT process. So there has been the delays on this part, but we remain interested in some of the asset.
How come we don't see you on a relative basis as aggressive as the others when it comes to the NCLT biddings as well?
Actually, Neeraj, in case of NCLT, no power asset is you know, under resolution other than one or two, and which is in Bharat, or there was another asset which was the Monet Power. No other power asset resolution process has started. Some assets have been admitted, but the process has not started. And with the outside NCLT, yes, we have been working, but you know, the process is complex, and there are so many lenders, and each lender has their own requirement, and we are feeling that the consensus is not being built. among the lenders.
Okay. Now, please don't mind my asking this, but I was just trying to get a sense of whether you are looking to, shore up capacity only through the organic route, or are you looking to be aggressive on the inorganic front as well? And therefore, my next question, are you in any way looking at bidding in a big way for stressed assets across the spectrum, be it NCLT, be it outside NCLT, ILNFS wind assets? Are you looking at doing anything on that front?
I will take this question in a different way, Neeraj. We are one of the strongest balance sheet in the power sector and one of the most efficient power producer, having a debt to equity less than 1:1. And we are a free cash flow company, and we have a lot of appetite to grow. When we are having a lot of appetite, it does not mean we are keeping a very aggressive stance to grow and we are going to acquire every asset which is available. So there is a matrix which we have in order to create a best shareholder value, and then each asset we will be looking case by case. So we remain interested and we want to be growing in this particular sector, and we feel that whether it's renewable or thermal, the technologies are going to coexist, and there are the opportunity in both the space. So we will be there, but I cannot say that we will be aggressive for sake of growth, but for a value we are there.
In the ILNFS wind power assets, Prashant?
So I don't want to comment on a specific asset, but as I said, both in renewable as well as in thermal space, we remain interested at a particular value.
And don't worry, we won't read between the lines as well.
Right. Prashant, just, while you've addressed all of these issues, one issue that a company like yourself consistently is facing is the availability of coal and the need for going ahead and acquiring international coal at those higher prices. They probably are something that weigh down on the earnings prospects, along with the kind of fluctuations we're seeing on the currency as well. What's the arrangement there in terms of making sure that it's streamlined and the availability of coal happens at a regular and more importantly at a reasonable rate?
As far as JSW Energy is concerned, when we enter into any PPA, based on our imported fuel, both currency as well as the international index prices pass through. So we remain insulated from that, the variation in the exchange or the index prices. And when we are open for the merchant, then both sides are open. So that's how we have been practicing, and then we continue to practice on that side.
All right, so you're saying that the availability is not an issue for you at this point, and neither is the price, because you're able to pass it on.
No, not at all. Imported coal, the availability is actually more than what you can plan, and so that's not at all a concern. And our both exchange as well as the index price, both are passed through in case of PPA. And in case of merchant, we are taking a short-term contracts, and we do the maths that at what price and what index I am buying, and accordingly we enter into the short-term contract. So we are always protecting our margins.
You spoke about the demand picking up as well. You said about 6.8% in the month of December. Now, as we approach summer, starting January, you'll see a pickup of demand nonetheless. But as we approach summer, particularly, this number will shoot up sharply. Are you well placed in order to, what would the projection be for the months of summer in terms of a spike in demand?
So, if you look at the context, last year, Q4, the demand grew by 7.5%, and Q3 this year, 6.8%. So if I'm going to extrapolate on that metrics, I think the demand in Q4 will be north of 7.5 or 8%. That's what I am looking at it. And if you look at another thing also, that power demand to GDP elasticity is between 1 to 1.2%. And that's what we are seeing the reflection, and I believe that the demand will continue to grow on a year-on-year average basis around 6.5%. And going forward, probably it may surprise even 7%. And there is no new capacity which is getting added up. And another thing which is there is that the current year, the capacity addition target for renewable was 22 gigawatt. And as against that, till December, only 4.5 gigawatt of the solar capacity was added up. And in thermal space, no new capacity is getting added up. So this is going to create a capacity shortage probably in 2 years time frame in power sector, and then you may be seeing new capex starting in power sector.
You know, can you just talk a little bit more about your last time around? You had said that you're looking at a PPA on the Kutir hydropower project. What's the update on that now? I mean, I'm shifting focus now from you know, the thermal side to going into the hydro business.
So this project, we got the concession sometime in 2009, and we have acquired all the necessary approvals as well as the land has been acquired. And we kept that project on hold because there were no PPA which were being entered by the distribution company for quite a long time. And as you know, in case of our existing hydro portfolio, we entered into 376 megawatt of the capacity with Punjab and Haryana last financial year and this financial year. So we have been seeing that more and more states are interested to enter into the PPA for hydro capacity. And recently, you know, with one of the states, we have started the discussion for this Kuteha project also, and then we are hopeful that part of the capacity will get tied up with the state, and then we feel confident that this is the right time maybe to restart the project. So sometime soon we will be starting this project, and which will take around 4 years to commission, and it will be a low cost power.
Okay, so if all of this is true, well, let's assume that there is the coal shortage domestically doesn't impact, and merchant power players would actually benefit, and merchant power rates by themselves on a 12-month basis are actually moving up YOY, and you are not too aggressive, and therefore your balance sheet is all stable as well. What does all of this do, not just for the next quarter, but say for the next 1, 2, 3 years, to earnings and return ratios? Are they expected to size up materially for a player like you?
So if you look at 2016-17, you know, our interest cost was approximately 1,650 crores, and this year will be in the range of 1,200 crores. And in last 18 months time, we have repaid close to 4,000 crore of debt. So what all this has done is that our financial profile has dramatically changed. Our interest rates have dropped because of the improvement in credit profile of the company and rating improvement. And we have repaid a lot of debt, and because of that our PBT levels and as well as the ROEs will be improving. On another side, we have been increasing our PPA portfolio, so there is a more and more visibility of the cash flow. And now I think the time is for me the biggest target is that as and when some resolution starts happening in NCLT or outside NCLT, we can grow the balance sheet, and so that there is a further improvement in ROEs.
Okay. Would it be material, and would it have a Jacob effect at all? My final question on this conversation, Prashant, that maybe there's a period of consolidation right now wherein earnings and return ratios, etc., would consolidate, move slowly, and then at a particular point of time, there will be a big spike that could come in because of the nature of your business. Do you envisage that at all?
Very tough to say, when exactly it is going to happen, but I think the time is ripe, and very soon I am expecting the resolution in power sector will start happening. So I think 2019-20 will be an important year for us.
All right, and we wish you all the best for that, Prashant. Thank you so very much for giving us your time and talking to us about the entire business at JSW Energy. With that, the market's not doing a whole lot much. In fact, absolutely flat, slight negative bias coming in there. A lot more market action on the other side as well.
Yeah, so stay tuned for the FNO show from Devina and me and the team that put Indian Open together. Thanks so much for watching.
Delegates of over 100 countries, 15 partner countries, 10 partner business organizations are uniting on a global stage. They will also witness the India's biggest trade show, new opportunities for trade between Gujarat and Africa, Ahmedabad Shopping Festival, MSME Seminar, Futuristic Technology Exhibition. Watch the unfolding of Gujarat's future in Sprint 2022 and experience much more. Welcome to the 9th Vibrant Gujarat Global Summit, 18th to 20th January, Gandhinagar.